let's start. So how can I help you today, Jason?
Hi. So, I guess I'll give you my question and then some context about my situation.
Okay.
So, for quick context, I'm married to my wife is from Brazil. She
Okay.
lives in Brazil. We haven't started immigration, so she's a non-resident alien. Um, and I've been filing my taxes, married filing separately. And my question was, is there a smarter way to do my taxes? For example, if I file married, filing jointly, then if she works and she makes a decent amount of money too. So I was wondering when they do our if I did that option, does it like not because that would be double taxation. She'd be paying taxes on her income in Brazil, and then I would be paying taxes on her income, but we're not sharing that much income. So that was one thing I was thinking. And then another thing I had heard was like gifting your spouse. I don't know much about that.
Mhm.
Another thing I had heard was some foreign income below like 100,000. She only makes like it's probably like 40,000 or something in a
Okay.
year. Some of that would that be like considered exempt, if we were filing taxes together?
hmm
And
Okay.
then
So, I mean, I guess you have a whole bunch. So how can we separate them out and see if we
yeah,
can address them one after the other? So where should we start?
okay. I guess my first one was I was looking for a way to have less tax taken out of my paycheck each month. Because
Okay.
I'll get a refund and I wanted less taken out. And I was wondering, can I count my wife as an exemption so I can put like the number two on my W-4?
Well, the current W-4 we have does not have the old ways of doing things. I'm not sure if you've taken a look at the current W-2 W-4 form, but there's no place to put exemption and allowances. What you actually have to do is to complete, or I think it has like 4 parts that you need to complete. And if you have, if you're single, you basically state that you're single and then you sign the required forms, and your employer is going to use whatever you've completed and then cross-check against the IRS tables to figure out how much taxes to take. Okay. If you are married, you state you're married, and then also there's on the form, there's some places that you can specify if you want more taxes to be taken off and all of that. But it's something that you have to figure out on your own. However, the IRS have a W-4 calculator or estimator on their website, and you can just go through the questions, and it's going to help you to figure out how to complete a W-4 accurately. Okay.
Okay.
Yeah. So it's basically based on information you provide as your employer. That's what determines, what you're going to claim on that W-4. But if you're planning to use your wife as an exemption or allowance, the current W-4 does not have a place for that.
Okay. Maybe
Okay.
I can schedule for some question like that, should I just go to like maybe H&R to see if there's a way to fill out my W-4 so they can take less out each paycheck?
Like I said, there's a helpful tool. It's called a W-4 estimator on IRS
Okay.
website. Okay. So when you go on Google, type in W-4 estimator or calculator, and
Okay.
it's like a Q&A. It's gonna ask you, okay, what type of income do you have? How many, and it's once you're done, it's
Okay.
going to tell you how to complete your W-4.
Okay. All right.
Okay. Yeah. So you don't have to go anywhere. You can actually use the IRS Q&A stuff to, get things done.
Okay.
Okay, so we don't have much time, but let's see if I can still help more on some of the issues, such as filing jointly and whether your wife's income is exempt. Now, when you are married to a foreign person or a non-resident alien, there are generally there are 2 types of tax filing requirement. The tax filing status that you can use, which is either the filing separately or filing jointly. Usually filing jointly gives you a much, better advantage in terms of taxes and the tax bracket. And then separately, usually you're disqualified in taking certain credit and all of that. So a lot of people want to file jointly. However, the problem is that sometimes when you're filing jointly with a non-resident alien, they really don't want to do that because maybe they are making a lot of money back home in their country and they don't want that money to be taxed. Or they have, other things like a foreign bank account and foreign companies that they don't want to bring into the US system or reporting. Okay. So they decide to stay away, and then you can just file separately. But then when we look into all the situation and we realize the foreign spouse really doesn't have much to lose or doesn't have much things to report, even if we decide to file jointly, then we can file jointly, okay? So in your case like this, where you said she has a job that she makes 40,000, okay? Mm-hmm. It's not that much of a money. It's a small amount of money. Plus, if she doesn't have any type of foreign company that she owns or any kind of foreign trust and all of that, that kind of makes it complicated. And the only thing she's making is working for someone and making that money, or working for herself and making that amount of money. Then there are two ways she can avoid the double taxation. Okay, so she could still file with you jointly and avoid the double taxation by two ways. One is there is the foreign earned income exclusion. Okay. The foreign earned income exclusion says that if you are a US person and you work abroad and you qualify under the foreign, that either the fiscal present test or the bona fide present test, the bona fide residency test, then you can exclude up to 120,000, but you still have to report it, but there are mechanisms to exclude that income. Okay. So in her case, go ahead.
She's not a citizen or a resident.
Yeah, but you would be making a special election to treat her as a US resident for tax purposes. Only for tax purposes, not for immigration purpose. Okay? So when you do that election on the tax return, it is almost as if she is a US person and all the US tax laws applies to her. Okay? So when you do that, then it means that all her worldwide income, so income that she earns in Brazil and earns in other countries, will come together and be taxed by the US, okay? And then she can take the foreign earned income exclusion to exclude the income, okay? Second, if the foreign earned income exclusion is not favorable to her, she can use the foreign tax credit, okay, to avoid double taxation. So the foreign tax credit basically means that if the same income is being taxed in Brazil and the US is taxing the same income, then the taxes that she paid in Brazil, she could claim it as a credit here in the US to reduce the US tax base, okay? But generally, most people will use the foreign tax credit when the foreign country's taxes is higher than the US, okay? So if the foreign country taxes is really higher than the US taxes, then it makes sense to use the foreign tax credit. However, if the foreign taxes is lower, is really lower, or you live in a country that doesn't even tax the income at all, then it makes sense to use the foreign earned income exclusion.
Okay. And Brazil is like kind of like a social, like public health economy. Okay. They pay a lot of tax. So it might
meaning the tax rate may be higher.
Yes.
Yeah. Well, anyway, so what we tell clients is usually you can work both of these two scenarios, and see which one works for you. You can do the foreign tax credit scenario and see if it provides a much better advantage, or you could try the foreign tax credit, side by side. The foreign earned income exclusion side by side to see which one, is more favorable to you.
Okay.
Yeah.
All right.
So whichever is favorable, then you pick it.
Okay.
Okay. Now, one thing I would also say is let's say your wife decides to file jointly with you, there are certain logistics that you guys need to take into consideration. For example, she doesn't have a social security. So the first time you guys file jointly, you would have to file by paper. Okay, you cannot file electronically because your wife does not have a social security, and she has to apply for what we call the individual tax identification number, ITIN. Okay, when the ITIN is applied, it's attached to the actual return. So you will send the ITIN application W7, including the tax return, to the IRS. Now the IRS will process the ITIN, and then they will issue your wife a tax number, and then they will forward the rest of your tax return to a different department for it to be processed. So it's a two-stage process, okay? ITIN will be processed first, and then the rest of the return goes to a different department for it to be processed. But then after that, in the subsequent years, you don't have to file by paper anymore, because by the following year, your wife already has an ITIN, and you can continue to file jointly electronically.
Okay. All right, that makes sense.
Yeah. And then another thing I have to say is, in the application process, when you're trying to apply for ITIN, there are two ways you can do this. One is your wife, both of you can decide to say, okay, your wife will send her passport and everything, or her original document, to the IRS directly, and then they will process the ITIN. Most people don't want that. They don't want to send their passport to the IRS because they don't know when it's going to come back. So the second option is they can use people like us who are certified acceptance agent. We would actually get the passport physically in our hands, and then we will interview you through Skype to see if you're the same person in the passport. And then once we do that, we will return your passport back to you, usually whatever medium you pick. So it comes to you quickly, and then we will send a photocopy to the IRS. So we don't have to send your original passport when we do that. Okay. So those are the two methods you can use when you're applying for ITIN.
All right. Thank you.
All right.
Yeah, I know our time's pretty much up. That was helpful. No, the foreign earned income exclusion, it's like a credit, it's a percentage of her income that's counted as like a deduction.
No, it's not it depends, right? It depends, because every year the IRS have a certain amount of money that you can exclude. Okay. I think for 2023, I think it's 120,000. I will have to double check my figure. In the cases where your wife makes 40,000, she's really below that, so she can exclude all of it. If she makes, for example, if she makes 150,000, she can exclude 120, and then the 30,000 will be taxed. Okay? So it all depends. And sometimes too, we use percentages when it is determined that your wife has not stayed in that specific country or in a foreign country for 330 days out of the, for 365 days. So for example, even though you may qualify for the foreign earned income exclusion, you may not qualify for the entire 365 days. You may have lived in that country for maybe, let's say, 300 days. So we're going to strike 300 by 365. Whatever percentage we get, we multiply it by the amount that the IRS have set up, okay? So let's just say if we go through it and the percentage is maybe 90% of the time you are in a foreign country, or 90% of the time you qualified, then we multiply 90% by the fixed amount, which is a 120. That is what you can exclude, okay? But in any case, if we work the numbers, I'm sure with the amount of money that your wife is making, which is a 40,000, it will be well below the standard amount.
So the IRS would, if I put my income and her income together, and let's say I make 50 and she makes 40, they would just be taxing me on 50, or it would be something else?
So the foreign earned income exclusion is applied individually, okay? It is only your wife that qualifies for it. You don't qualify because you live here, okay? Your money you make here is not foreign source income. Your wife's money is foreign source income because she lives in Brazil and that's where she's working out from. Your income here, that has nothing to do with it. It's only hers that can be excluded, not you.
When she files taxes, it's excluded. I see. So my
Right.
tax won't change.
Right, it
Hers
won't change.
would.
Yeah. All right, cool.
That
So
makes
I gotta go. Anytime if you need me in the future, you can always go to my website and